The Bulls win Q1. The Bulls are winning Q2 so far, yesterday and today. We got a long way to go. Jobs number on Thursday, shortened week for the holiday. What do you do with a stock that pays a $6 dividend every quarter? Interesting discussion. We'll talk about ZIM. We got some ratings out there to continue. Crude in the 80 handle. Dan Pepitone is going to join us from TradeZero. And folks, we got to get the show on the road. Let's go, Mitch.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, good morning, folks. We're higher by 13 3/4 handles at 41.6750. No resistance up here, folks, until we get closer to 4,200. We'll see if we can do that today. The buck in the red by 7 cents. Can't really find a bid yet. 101.71 is where we're trading. Bonds down a half a point. 131 and 14/30. We'll call it. Crude, the rally continues. 2-day move up 90 cents at 81.32. Are we moseying our way up to the mid 82s? We'll find out. Gold battling a 2K down 70 cents at 1999.60. Silver trying to make a bid over 24. That's up 6.4 cents at 24.085. At Bitcoin futures, they're up $280 at 28,545. Triple D, man, kind of just a sleepy rally yesterday. You can't really stand in the way of it. Didn't get down to good support. And how do you short or take the other end of this trade when there's not a lot of resistance in here?
Well, you got to be very careful shorting stocks here, and it's just climbing the wall of worry. And again, we've talked about this. It's tech. And again, I'm going to say I think tech wins in both environments. More banking crisis, tech wins. No banking crisis, tech probably wins. So that's what the market keeps playing. And yesterday, the dip in tech, you think, okay, maybe we'll cool off for a couple of days. I was hoping for a cool off to actually buy tech. But we cooled off for what, 20 minutes, Mitch? 20 minutes?
If you can call it that. I think that was just an opportunity.
We're down $3 in NVIDIA, and then boom, right back to the highs.
Yeah, the NVIDIA chart was pretty volatile yesterday. It started with a nice little rip, then came right back down, then ended with another little rip.
FOMO is dominating. FOMO dominating all right now. People got it on their brain that everything is behind us. The Fed is done raising interest rates. We've beaten inflation. And there will be no more banking crisis. That is what the market is saying. You know what? It could be right. There is a scenario where all that does work. Yeah. I don't see it on Main Street with the inflation, but the banking crisis is pretty quiet right now. Not too much happening there, so they're not worrying about that at all. And again, the market is not forward-looking. It doesn't look forward 6 months at all. It doesn't have a clue. It's made up of uninformed market participants. So right now, it's like, well, appears that, there's no more bank failures here for a couple of weeks. FRC seems stable. And the Fed sounds like that they're going to slow down rates.
Yeah.
Let's go. Let's go. LFG. That's what the market's saying. LFG.
And if the market's holding up good in this kind of environment, why do Powell can still raise rates. We can still fight inflation, right?
Well, they don't want. They're saying that no, they're taking both. This is the silver lining market that the banking crisis is done, and we're not raising rates now. So we keep the pivot because the pivot was coming sooner because of the banking crisis. But the market, no, it keeps the pivot, and there's no banking crisis, so it wins. That's how the market works. Prices everything to perfection. Everybody loves stocks; they only go up. Remember? So
I've seen the market only do this once.
Trading market neutral. The market neutral is working. The haters can hate. I posted my results yesterday for the 12 months and for the month. It was a pretty good month. I think I made 6.7% on the month. Again, trading market neutral. If I was trading full on how I felt, I'd be losing money. If I was trading, because I was up bearish, there's no doubt I've been wrong on that side, but I trading market neutral. And you can't fight this tape. Sometimes I trade bearish. Sometimes I lean directionally. Right now, it's a tough market to be directional in. So I'm just taking advantage of little market inefficiencies, and we've talked about that. We've done 4 courses on that on premarketprep.com. There's lots of different opportunities, just looking at, different news flow, relationships, different things. But that's a different style of trading. People like to make bets. They like to call the market. They like to make directional bets. Tough directional bets right now if you're using fundamentals. But if you're using technicals, to your point, Mitch, the technicals are starting to look better.
Yeah, let me bring up a point. I mean, I don't want to be too much pointing towards prior shows, but we were talking about the stage 3 expansion from the Golden Cross. This looks like that expansion move. I mean, if you look at what we've done in the recent, and this was before when we were just starting to talk about this, right? Now we're really in that kind of stage 3 where we get that continued uptrend. And it seems like that's what we have right now. I mean, look at the prior action that we've gotten in the last kind of 3-4 days. And that's a pretty strong up move. I would have to say, at least just in the prior, the action in the last 4 days. That's pretty strong. Where did we get to
That's what we've said. I mean, we've said that it's been a huge
Are we going
move.
to that continued uptrend where we just going to continue climbing the wall of worry? That's where
the bigger question for day traders today, though, and I've been wrong, is do we just continue without a check back? I mean, we've had so many check backs that I find it hard to just chase it here from a directional perspective. Obviously, trading can do lots of different things. It can do, different styles, different technicals. You can go into different areas. There's lots of different opportunities. But, if you're just an investor here, you're looking, you got some cash, you're getting nervous that you're missing the boat, which is exactly what's happening. People are very nervous right now that the bottom is in and they've got to jump in. And I mean, let's give a perspective here. We're still significantly off from where we are. So if you want to chase it, and you sold early last year, let's say you sold 370, 380 on SPY or Qs, 400 on the Qs. 400 was the top. Probably not a lot of people got that, but 380, 370, 360, you're still scalping yourself 40 points. So, maybe there's an opportunity here. I raised a lot of cash early January. So I probably would be still better off. I just came in here and bought it all. But I think you're going to get a check back. And I still don't know if we're in the clear. So
and the chat is on the same thing we're talking about. You
the
see
FOMO
it in
is
the
driving
chat.
the bus.
You see the chat talking about pullbacks. You see the chat talking about the trend is your friend. That FOMO's kicking in right now, right?
FOMO's not kicking in. FOMO is full on.
Yeah.
There's
someone saying that they believe Joel's high of the year is still in, right? I mean, this is what I'm saying. There's still a lot of confusion out there also. So it's a tough market right now because there's still concern also in the bank, right? I'm going to bring in Jamie Dimon's comments so we can kind of keep talking about the situation that's going on. Jamie Dimon coming in, long time, of course, JPM CEO, said that the latest financial shock in his annual letter that the crisis is not yet over. And even when it's behind us, there will be repercussions from it for years to come. But more importantly, recent events are nothing like what occurred during the 2008 global financial crisis. And this came out, of course, in his letter, his annual letter to investors.
I agree with all that. It's nothing like the financial crisis was. The Fed, had serious problems there with no bullets, and they had to throw money at it, obviously, and that's what happened. And this is how this is the start of how the U.S. debt has grown to be so much. Really, they've continued to throw money at all the problems. This is just the whole point to Bitcoin, I guess, is just can't keep the printing press going here. And we know they can turn on the printing press if we really get into trouble. So they have the solution. They don't want to use that solution. And you know what? So far, great call by Powell. Let's give him props here. He did not panic, Joel, in that last conference call. He did not really even talk about the banking crisis here. He made the right call because the market is forgetting about it. And that's the best thing for the bulls. So you can't argue with the bull case here. It is there. It is real. And you know what? It could be right. Nobody's got a crystal ball here. If you really think it's over, here's a play for you if you want to play. If you think it's over, and I'm not in this camp, I'm still sitting with 65% cash in the long-term account. Trading is fully always margin. I'm margined at trading. So there's all kinds of stuff going on the trading side. But my long-term is sitting with like 30-40% tied up at 5.2%, and there's about 30% is ready to deploy, and some of it I may deploy if we get a pullback or significant. But if you really think it's over, here's a fun play for you. FHN is being taken over by TD Bank, First Horizon. This thing got absolutely murdered. It's a takeover. $25 cash, Joel. $25 cash. You can see what it was doing before the financial crisis, or before the regional banking financial crisis. And they punished this thing and they cut it in half because they're like, they're going to try to get out of this deal. And then First Horizon's on its own. And maybe First Horizon has a bad book too. And maybe it goes under. So that's what they were doing. But I mean, if you think it's over, this thing has already a takeover price of 25. And you know what? If TD walks away from this, they're probably going to get sued. It's similar to the Twitter setup. Musk tried to walk away from the Twitter deal. He couldn't get out. So TD would really have to be looking at ways to try to get out of this if they even want out of it. Maybe they don't want out of it. But there's an interesting setup here. So if you think it's over, FHN 18 to 25, what is that? That's $7 because 25 is a takeover price. $7 and $18 stock. You're talking about a 35%, risk reward here. And obviously, if it's got a bad book and TD gets out of the deal, there could be a zero, but it doesn't feel like they're all going to zero here right now. And this is actually trading where it was prior to the takeover. It's back below it. Now it's popped a little bit here in the last few days. Would have been nice to bring this, up at 15 or 16 because it's slowly been climbing, but looks like consolidation station, kind of ready to break out here at 18. Again, though, you've got to have the opinion that the banking crisis behind us. I lean to Jamie Dimon, and I think there's still a lot of unknowns here. So I'm not playing this, but I'm saying if you think it's over, there's an opportunity for you right there that really hasn't gone.
What about $10 left on the carcass for ATVI with the Microsoft? I mean,
that's a different story. But yeah, I think that deal's going to go through. But that's an antitrust issue more than anything. FHN isn't going to have antitrust issues. There's no way, a huge bank like TD Bank taking over a little regional is going to have any antitrust issues whatsoever. The only reason FHN is at 18 is because they think TD may kill the deal somehow.
Right.
And if they kill the deal, it's just back to where it was prior to the deal. But then, so there's two things that got to really go wrong here. TD kills the deal, and they have a bad book, and, that they start to punish it for that reason. And that can happen. It's possible. I don't know the books on FHN. I haven't done any homework on this. But I'm just saying, if you're of the opinion, and the market appears to be of that opinion, then I think that's a buy. If you think there's no more banking crisis happening. Again, don't take my words out of context. I'm saying if you're of that opinion, it's a buy. I am not of that opinion. I am not buying the stock today, but there's a setup there.
I'll play to your side of the coin here, Dennis. I actually brought in a little graphic for us today. I like to bring in some extra sometimes, and today's one of those days we don't have too much, so I'll bring this in. This is a cut from Barron's, okay? Got this. It's from the 30th, so a couple days old, but this is the largest U.S. banks with high concentration of commercial real estate loans. So if you started to see, one thing that I saw a trend yesterday, and that's why I started looking for this, was I started seeing real estate really getting hit hard. And what specific area? I saw commercial real estate getting hit hard, like office REITs getting hit hard. So I'm just pulling in here. I'm not saying that these banks, are going to have, issues coming up, but they do have 300. They've exceeded the 300% of their capital for commercial real estate. So they're kind of lending pretty heavily against this real estate. And you got names here that we've been talking about, like PacWest Bancorp. You see multiple names here. That bank, OZK. There's a bunch of these.
Bank of the Ozarks,
yeah, Bank of the Ozarks. There's a bunch of these that have a lot of exposure to those office REITs. And if there's any area that I could see maybe running into some issues, is maybe this real estate. Instead of this time it being more of your, your houses, your regular, this is looking like commercial real estate is the worry here.
Yeah, it is. But the commercial real estate wasn't the problems that, those weren't the problems at Silicon Valley Bank and Signature Bank. Those were the problems of, bad mortgage book. So this is a whole nother can of worms to think about, though. So, if you think commercial real estate's going to have troubles, that's more of a play on recession, though. like we go into a full recession and people aren't buying stuff, and now you get these complexes, retail complexes, whatever, machinery, whatever the commercial real estate is. I think that's more of a recession play as opposed to this recent banking crisis here. But the bottom line is a good point you're making up. They got a lot of money lent out to a lot of different, the regional banks got a lot of money lent out to maybe some people who are going to struggle if we go into a recession to pay them back. So there is a point there. I think the regional banks are telling you that they're still not safe because the KRE hasn't rallied a lick. And I keep looking at this thinking there's such a disconnect between the S&P, because it's all rallying on tech, and the KRE. Like, you would think if we were really out of the woods, wouldn't you think, Joel, that the KRE would start to be looking higher? We are sitting, at basically the lows. We're $2 off the low on the KRE. Doesn't that tell you that, hey, maybe we're not out of the woods? I mean, this is what I do. This is how I make my living. People are asking me, how did you make 100% on your trading account last year? As I posted those results. People are asking that question. By just looking under the hood, not just going and looking, okay, S&Ps, everything's going up, you just got to buy stocks. Looking under the hood and seeing, is this rally for real or is it not? When we look under the hood of the recent S&P rally, we see the reason is that it's 7 stocks that drove the entire return. 7 stocks, the big 7. Take those out, and the S&P was down in the first quarter. Doesn't look as rosy. We tweeted those stats out there. So, I mean, I just look under the hood here, and I think, why am I chasing a market that still has potential problems? So that's why, from a long-term perspective, I'm sitting on the sidelines. From a trading perspective, I'm just doing all my little inefficiency strategies, which we've talked about lots of times. So, I mean, it's just a lot of risk here. And maybe I'm wrong. And you know what? If I'm wrong, I'm going to get paid 5.2%. The market goes up 10, I'm going to lose 5. The market goes up 15, I'm going to lose 10. That's going to suck. I just don't see us rip roaring and rallying to all-time highs. I gave this same conversation in January when we had the fight with Mark Chaikin on the show. And Mark was very bullish. And we tanked after that. I mean, we just got to watch chasing this market. And Mark's made some great calls lately. Not everybody gets it right. Everybody. If, like, again, people are so mean on Twitter. You call something wrong once, they will post that. They'll take a screenshot of it. They'll say, this guy's an idiot and he doesn't know what they're talking about, because just prove their cases. Again, nobody's right 100% of the time. If you're right 51% of the time, you're going to make money in this business. So nobody knows for certain what is going to happen here. All we can do is take the risk, take the return, and analyze it. And that's it. I like the Oxy of 58 to 60. The risk reward sounded pretty good with Buffett buying. P 6, stuff like that makes sense to me. Chasing the S&P up 8% a week and a half doesn't make sense to me. So if it keeps going, so be it. You know what? There's going to be another train. There's going to be another opportunity. That's what FOMO people don't get, though, is there's always another trading opportunity. Just because you missed the one, they'll dwell on it. A new trader will be like, I can't believe I missed that. I called it and I missed it. And they dwell on it and they dwell on it. And then it affects their trading mental capital. You can't do that. You move on. You know what? You're going to be wrong in this business every single day.
A lot. Yep.
A lot. And it's okay to be wrong. It's not okay to stay wrong. I haven't been proven wrong on my 65% cash holdings yet. I might be wrong. And maybe I'm going to struggle. And maybe the market's going to take off without me. And I'll be like, man, I really screwed up raising that much cash. But you know what? There'll be some opportunities.
There'll be more opportunities for sure. Yeah, there's always more opportunities. That's one thing that is always present, whatever it may be. I'll tell you what, let's go ahead and get to another opportunity. It's time for, of course, TradeZero Tuesday. Dan Pipitone back in the chair. What's going on? How we doing in this market?
Having a great day, fellas. Great to be back. Thanks for having me once again. The graphic and the intro gets me every time. I love it.
Let's get to the action, of course. You were recently out there in Hawaii. I put it out there. You were in the waves. You're dealing with the waves, and we're dealing with the waves in the market right now. How are you dealing with the uncertainty out there? Because I know that, you probably have your own investments out there. You don't got to tell us about it, but How are you dealing with the uncertainty in the market?
Well, you know what? I do want to mention one thing specifically as it relates to the uncertainty and one of sort of the mitigating actions that our clearing firm is actually taking right now. You know, throughout the last month or so, with these regional banks sort of you know, really scaring a lot of people, creating runs on banks, et cetera, et cetera. The Fed's come in and really, you know, provided the backstop. So you know, lots of these banks that, you know, may have had issues with depositors above 250,000 past the FDIC backstop we're looking to potentially have some issues. So as it relates to like trading accounts and whatnot, at the end of the day, when folks are funding their accounts with a brokerage firm, the money is held at a bank. And a lot of times, clearing firms will actually, at the end of every day, will sweep money into money markets and stuff like that to create interest-bearing opportunities for folks. But what Apex has done, really, I think, is an answer to Apex, one of our clearing firms, where TradeZero America, we cleared Apex Clearing. They have actually created partnerships with lots of different banks, so that folks that have on deposit more than 250,000, they're actually able to spread via an algorithm the deposits across multiple banks, multiple banking partners, to provide an insurance layer of up to $5 million per segregated account.
Wow.
So really, I mean, just beyond next level, this is something that they announced yesterday. Really is an answer to this. So I'm proud to kind of announce that here to folks that, you know, there are some people who are putting some thought into how we can make folks feel a little bit more comfortable and better about where they put their money, putting their head on the pillow at night, especially with accounts with bigger balances. You know, I know for myself, I didn't remember ever having to think about doing sort of the banking two-step since 2008, 2009 during the financial crisis, where folks are really scratching their heads as banks fell one after the other. Like, whoa, I have 270,000 in that bank. I am actually exposed by 20,000. Let me spread that around. And that really hasn't been a theme up until about a month ago.
Yeah,
So,
I mean,
sort of some mitigating banking action from the broker-dealer perspective to sort of allay some of those fears as folks have, you know, bigger balances on deposit with their broker.
It's something to think about here, and I'm trying to remember back to The Big Short. You know, and I read the book back in the day, but remember the person, the gentleman in The Big Short, who was betting against it, calling the whole damn thing, and then his own bank, he's like, "Oh my God!" He's like, "I've called this. We're making all this money. My bloody bank's gonna go under. I'm gonna lose anyway." I think that was from The Big Short. Do you remember that conversation?
Yeah,
I remember who it was. A chattel beyond that. But I mean, you think about it. I thought about it back during the financial crisis too, because I was doing pretty well trading.
Right?
Wouldn't that suck? You call it all, you do it all, your account's going way up, 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 and all of a sudden, boom, your bank goes under. You're like, I lose too. I'm like, that's a worst case scenario. So yeah, it's important, you know, and it's something you think about when it really starts to get stressful. Is my trading capital safe? You know, is it safe in my account? So, you know, it's good news when you feel like, you know, it is, when you can sleep well at night.
For sure.
So what Dan pretty much told us is he's not as good as the government, but the TradeZero backstop, it seems like there's a backstop there. So let's get to the action. Now, one thing that I notice often, Dan, is that for traders often, especially retail traders right now, they want to have access to speed. And I've used hotkeys before. I don't know if, Dennis, you use hotkeys right now. I've seen you cancel all real quick.
Cancel all button.
So sometimes we need to have access to speed type of trades, especially when we're trading fast movers. I know there's fast movers that we'll be looking at today, like the AI stocks, of course. I talked about it as AI stocks get prompted higher today because definitely been seeing them get the push. Butterfly Network today is getting a big push on an AI-enabled lung tool. How could we potentially use some features that TradeZero has to offer so that we could get access to those hotkeys and some fast trading?
Cool. Let me show you guys an example here. I'm going to present.
Okay, he's going to present.
And faster is better. I definitely agree with Rich.
It is. I mean, hotkeys, it's so important. I remember the first trading book I read. As you're bringing this up, I'll just tell the story. One of the first trading books I read back in like 1997. and they were talking about sending orders, and the person in the book was like, I read the order ticket from the top to the bottom and from the bottom to the top to make sure I'm sending the correct order. And I'm like, looking back, I'm like, that was the stupidest advice I've ever heard in my life. By the time I read the order ticket back and forth, front to top to bottom, I missed the trade. Now I've already traded it in and traded out of it. You've got to be fast on.
Yeah.
If you're going to be a professional trader, you have to be fast.
Once you've made your decision, you want to execute on that, right?
Immediately.
So,
from idea generation, a discretionary trader, and he's going to show you this right now, a discretionary trader should be able to go from idea to execution in less than 5 seconds. I'm not joking. If you're a discretionary trader, you've got to be able to do that in less than 5 seconds.
Okay, so I have my dashboard here. You guys, I've showed you this a couple times now.
Yeah.
I'm going to go into the hotkeys section. And what we have here is the ability to create a bunch of different hotkeys, whether it be, calling a window into focus, all order actions like we just talked about, like cancel all, replace all, liquidate all. So these are sort of the nuclear types of buttons. Then you have your set up or send order, which I'm going to do a couple of these right now. I've set up one in advance, which is a buy ask of plus a penny. So basically I'm going to do we'll do a sell.
Can we blow it up a little bit more, Mitch, just to see, because it's hard to read
I got
here.
you, my friend.
So maybe he can blow it. I don't know if
I'll make it full screen here.
Mitch is going to make it full screen. He's
okay, all right, cool. Yeah, some of this
that should make it a little bit better there. If not, we could try to get it a little bit. We'll zoom in. There you go.
So I'm sending an order right now. I'm creating a hotkey to sell shares at the bid price minus a penny. So this is something that if I want to get out, especially in the pre-market, is a type of key that I would set up. So in our price source area, you have the ability to leverage all of these price fields: bid, ask, last, average price, etc. And so you can create a price offset, so bid minus a penny. And I am going to now create a label for this: sell bid minus 0.01. And then add to the grid. Okay, so now I'm also going to create what we call hot buttons. So while you can create multiple actions and tie them to a keystroke, you can then take that keystroke, and if someone's not comfortable with using the keyboard, we can create these hot buttons that are in lieu of pressing. I set up a Control B to buy 100 plus at a ask plus a penny. Control S to sell 100, bid minus a penny, or now it can use these hot buttons where they will be appended to my level 2 window right here at the bottom, where I can now easily, instead of doing the keystroke, I can use these buttons.
Press the button.
So let me just use this one here. Okay, this is a hard to borrow. You want to locate it? Sure. Let's do a full round trip here.
So you just executed?
Now I just executed. And I've just actually located 100 shares of B-Fly. So something didn't go right here.
And he's showing how to build these things right now. Once they're built, it's just a matter of pressing one button to execute. So actually,
what happened is I pressed the buy ask of 0.01. That was my label, but the button was actually a sell short button.
Oh,
I'm going to change that to
because he's building it on the fly here. He's building it behind the scenes.
Okay. And Control B, or my buy ask 100. And so this is my confirmation window, which you can then you can disable this. But if I hit OK, my order to go out at ask plus a penny is now out there live at 228. I can cancel this. I could also use my button here. We'll do the same type of action.
Executed.
And that button, we actually bought the stock at 229.
Yeah.
So it's a real easy way and a fast way to get into trades, to get out of trades, and to really manage positions in a quick way.
Yeah, I really like
all this stuff is critical. I mean, it's funny that you have these buttons. I have the exact same buttons on my system as well. the buy at the ask plus 1 cent. People are like, why would you buy a penny above the ask? Because when you put penny above it, it means you're trying to get the ask for sure.
Yeah,
so you're like giving it, if it moves a tick up, you're still going to get it. You want to be in fast. So you still get the best available price when you put that. It's not a matter of, you're paying a penny above the ask. You just want to get it for sure. So you're like, on that B fly, if he puts that order in there, it's 229 or 230. If the ask suddenly moves to 230, he's going to lift the 232. He wants to get in there fast. Yeah. So he's just making sure. But if your order goes in at 229 plus a penny, you don't pay 230 if it's 229 offer. You still get the 229. So all that is like lift the offer fast is what that button really is.
Yeah, and you probably need to adjust it for different stocks, right, Dan? I mean, like you're
100%.
Yeah.
I mean, if you were trying to trade Tesla, plus a penny is not going to get you in.
Yeah, you're not going to get in.
Yeah, all day long. So for those who may want to do a dime or 15 or 20 cents for those sort of nuclear type get me in, get me out type buttons.
Yeah, it's one interesting order button that I sometimes had, and this is when I traded really fast movers that just kind of jumped 30 cents or something. I'd put out an offer plus 30 cents to sell at that spot, especially like, let's say for stocks that are coming out of halts, like those really fast movers. I'd throw that out there just in case it would just jump up there. And sometimes I'd get these little instant fills and I'd be like, well, I somehow just got filled there. Let's go. Let's take it. And you take some quick little money there. But like always, one of the things that's very important is scripting it the right way, right? If you script it the right way, every time you hit it, you know that it's going to work for you. Having different abilities to get out at that moment is very important too. Because if you're just seeing, if you just hit the sell on the limit, you could start watching that stock just completely just blowing through those limits. And if you're not getting out, you're just wasting cents here while you're already in that decision making, right? So when you want to get out, you need to have the speed to get out.
To your point, we do have a range order type that we support, which is essentially one cancels other order. So if you're in a position, we allow you to put in a stop and a limit for profit, a for-profit limit and a stop, whether you be long or short, so that you don't have to babysit the position. If you hit your for-profit target, you'll be out, and if you hit your stop, it will take you out and also cancel the other side of that order.
Perfect.
And that's key too. I talk about this. It's funny you bring up all these things. It's funny when you get a trader like Dan's been around so much. It's a different conversation than like I talk about the same thing too. Is people like, why don't you trade those big crazy movers? Why don't you trade that new stock? And you don't want to know why. For the most part, I don't want to have to babysit it, because when you're trading something that's moving 20, 30, 40% here in a few minutes, that's something you've got to stare at the whole time and be working. But when you have different order types, it can take you out, and having different tools is the key to obviously being able to trade efficiently here. So the tools are so important.
Definitely, and definitely I like to test those scripts, because trust me, I've heard some horror stories. If you
guys saw that in live action.
Yeah, definitely.
Yeah. You got to make sure that when you're writing it, write it. When you're coding,
I'm telling you.
Oh yeah.
I've heard some horror stories.
I have some horror
traders.
stories for that. I've told stories on this show where I've had horror stories.
I mean, you hot button with that. Hot button with, like, let's say a buy 1,000 shares, but it ends up buying 10,000 shares.
That sucks.
Yeah, it's a big difference.
I got one for you. So, a lot of folks who are day trading the market also will do things like, play electronic gaming. They're playing Call of Duty while they're in the middle of a trade. And we've had instances where folks left the platform up in focus and using their joystick on the keyboard mapped to a hotkey that was also a function in the game that actually sent orders out.
Oh man!
Oh my God.
That's the future of trading, Dan.
Call of Duty, they were buying Tesla.
I'm waiting for you to tell me about the feature that has the Oculus trading features. I know that's coming soon.
That'll be coming soon. We have ChatGPT working on it.
All right.
Hey, Dan, is the platform available to Canadians?
Yes, it is.
Okay, that was a question.
Folks in the U.S., TradeZero.com, Canada, TradeZero.ca. We're an IROC registered dealer there out of Toronto, Ontario. And for our international folks, TradeZero International out of Nassau, Bahamas.
All right. Like always, you guys can check out, of course, TradeZero Pro that you guys saw the platform use today. And we'll have you back on. Dan, appreciate you coming on today.
Have a great day, gentlemen.
Thanks, Dan.
All right. Take care, Dan. All right. Let's take a little peek into the market. How we looking, Joel?
We're quiet. We're quiet.
Yeah.
We're just hanging out here near the highs of the session. That just a steady climb. 71.75 is your pre-market high. Just not much in here. We put the close in the rearview mirror. That'd be a support here if we come down. But just a quiet session here so far.
I mean, we're going to be quiet. We're right in this lull before earnings season starts, before the CPI data, before, like we talked about this even a couple weeks ago. If there was a time for the bulls, it really was this time, this lull here.
Yeah, there's a window.
The only thing that was going to derail is if we had another bank failure, but that doesn't appear to be coming anytime soon. And I mean, I love the response, and JC made this point yesterday. I love the response to, earnings that haven't been great. Kramer made this point again too. Some of these earnings reports have not been that great, but they're buying them. Silver lining market, they say anything okay. I mean, the Micron report was an epic disaster. It wasn't good at all. And they rallied the hell out of it on. Now, it has sold back off since then, so maybe they got their head together, which I have no idea why they were buying that. But, I mean, it's something to think about, is that when they start rallying stocks on not great news, that means, that the bulls got a really good case there because, if they say anything good, it's going to go. And even look at the small earning stocks here today. And again, very small companies. The only ones reporting are MSM, which is up $3. And I haven't looked at the reports themselves. And AYI, well, this is a bad one. Obviously, it's going down. So not making my point here. Again, if you lower guidance, you're probably going down no matter what.
That Micron came back down, though. That Micron came back down, though, Dennis. I mean, so it was up there for a day and then went totally opposite the market. So they bought it for a day and a half, and then it wow, look at that $64.
It was a bad report.
Yeah,
the bottom line with the Micron was it went down originally on it, and it made sense to go down, and then it rallied, and I think they just thought it was a dumpster fire quarter, and this is as bad as it's going to get. Now they're realizing maybe that maybe it just wasn't a good quarter. It wasn't a good quarter. But you know what? This is the way this market is. It's, a market that is finding reasons to buy stocks. And you know what? It's FOMO. It's driven by FOMO. So FOMO will make you do funny things and it'll make you buy stocks on bad reports too.
All right, let's take a look. We didn't get too deep into those AI stocks. Do you want to take a look at those? Those are definitely getting the big move today.
What do you have from the AI front here today? I know AI itself has been a monster mover. So
yeah, let's take a peek. So what we're going to do is we're covering more of the theme of AI than just specifically one here, but let's do it. So AI, of course, is the bigger one. Today, getting a huge lift is B-Fly. You guys saw Joel had that chart up just a second ago. So that's BF, of course, FLY. That's getting the lift this morning.
What was the reason for that one?
It's an FDA nod on an AI-enabled lung tool. So pretty much it's an AI thing that can help you with like some lung issues. I have no idea what the lung issue is for necessarily, but if the FDA approved it, I guess it should get a little lift, right? There's a couple more, though. That
I feel like it's a buzzword drop.
Yeah, it is.
B-Fly.
It is.
I don't know what B-Fly does. Is this a Kathy stock? Wasn't this
a medical device? It's a medical device stock, just to kind of mention that.
We better throw an AI buzzword in there on something.
But take a look
I'm not a fan.
Take a look at this chart. GFAI, Guard Force AI.
I saw this one yesterday.
This one was just blasting. We were watching this one on live trading as it was going up and just watching it just halt in, halt up. And it was ripping. Big move yesterday from a low of $8 to a high of $21.19.
What was the catalyst here? I don't follow the story whatsoever. I'd never heard of the stock until yesterday.
It's just kind of that AI kind of storm right now, man.
Okay, so here's a question for you. Let's take it back from the storm. This has an actual GFAI called Guard Force AI. Is there any other companies that have AI in the name or the ticker symbol? Is there anything that hasn't went? And Chad, I'm throwing this to you too.
That's where it gets hard. There is one that just started going, which was IonQ, but that's more quantum computing. But that's also used for AI. That's IonQ. But yeah, the chat, if you guys want to throw
small
some
little
up there.
AI plays are just like this is we go through these, and again, a lot of these trades are going to end up, if you hold them long enough, losing you money. But we know in the short run there can be good opportunities in getting ahead of the buzz, getting ahead. And so right now, anything that has anything to do with AI is blasting off. So we've got some of these smaller stocks that have something to do with AI, and BFLY, to my understanding, really had nothing to do with AI. But all of a sudden, that's the cool thing. So they've come out with some type of AI lung or something like that, which or they're trying to come out with something like that. So that was the reason that this popped off here yesterday. So I mean, you run through your Benzinga Pro, and you look for AI. When AI pops in there, I'm not shorting anything that says anything about AI right now. I'll tell you that.
You know what? I want to switch subjects here just for
AI,
1 second.
The chat's good. Just wait 1 second, Joel, because the chat's still on this question before you take the conversation away.
No, I don't know about that one.
SOUN is one
Sound.
that grateful to God, and it has run.
I like sound.
Again, these have run already. $2 to $3.20. It's up 60% in 2 days. So you got to be somewhat careful. I'm just going through the ones. BFRG, Bullfrog AI. Look at all these little AI names. The chat is so good at this. This is why I do this show. I tell you, I don't do it for the money. I do it because I get so many different little tickers. I didn't even know Bullfrog AI existed. It's up
Come
50%
on,
today.
baby. Those are the types that we trade on live trading, baby.
I didn't even know this existed, these small little stocks. I got to listen to live trading too. POAI, here's another one. Predictive oncology. I don't know if
we have a guy in the chat there in live trading that does pretty good. Shout out to the Crow on pre-market prep. Yes, Crow, you got a shout out here,
Crow.
Man. You mentioned this one weeks
love
ago.
The Crow.
Weeks ago, GFAI. And I think that's what's important. One of the things that I think is always important, and Dennis is mentioning it here, right? We're not giving financial advice to each other, but putting things on the radar is just as good. Just wave the flag. Just say, look at me. And then let traders determine for themselves if this is a trade that they like, right? That's what we try to do here on pre-market prep.
Allen Iverson
is idea generation.
AI.
That's
baby.
That's what Benzinga is. It's just, even go to what Benzinga, go to the website. Benzinga.com is trade idea generation. That's all it is. We're giving ideas.
That's it.
That's all this is just an idea network. We're trying to bring traders together and get different ideas, more voices, more ideas, more things. I know that some of these stocks existed. So now I got potential pair trades on some of this stuff. So obviously, I trade from a different style. I'm not usually directionally betting. So when I'm buying something, I'm usually selling something else against it. Some of these GFAI is just too wild for me, something like that. But if you see a small little AI stock that hasn't gone yet, there's a potential right now. If it's ever going to go, it's going to be now.
It's going to go now.
Yeah, if it's ever going to go.
What I wanted to bring up was on Friday, the markets are closed, right? Right? We're closed for Good Friday.
We usually close.
They're still going to release the jobs numbers.
On Friday?
Yeah, that's what I was wondering, Joel. I saw the jobs number scheduled for Friday.
Sucks.
Can you believe that? I'm looking at Barron's here, and I'm looking at some of my other sources.
As long as we have Friday off, yeah.
The fixed income markets are going to open but close at noon. But the releases is going to. I wonder if the spoos are going to be open for that.
Joel, you find out.
That's annoying. I like to trade that.
I know. Wow. You got to be thinking about that with your Thursday positions there.
You do.
I mean, yeah. Yeah.
All right. Well,
wow.
We'll keep an eye on that.
I can't remember that happen. I mean, I know Good Friday is Good Friday.
I don't remember that happening either.
Well,
they didn't move it.
Yeah, they didn't move it.
We've had Good Fridays before, folks. I don't remember them not moving it.
Yeah, Easy Mike was right. And then
on Friday.
Wow.
Move it. We should have a petition here.
Someone didn't have their calendar up. That's what happened. So I want a
petition.
It happened last year too, Easy Mike says. Okay.
All right. Well, there you guys have it. Let's talk about some other hype story out there. Come on. Let's get towards the ape. Where's the apes out there? AMC Entertainment Holdings stated to agree to settle litigation and move forward with converting its preferred stock into common shares. Ape up already up there. It went past $2. Yeah. We'll see if this actually gets moving. Not really anything that I'm going to be trading, but hey, What do you guys think?
This has got to be the most publicized
Preferred
arbitrage ever. Everybody talking about it in social media. It's the only reason I stayed away from it, because it does look good on the numbers, like to be long the APE and short the AMC. But you know what the biggest problem is with the short the AMC? You know what it costs to borrow this thing, Joel? I'm looking at IB right now. You know what the cost is to borrow AMC?
Like 300%, 600%?
351% a year.
You see, I had that feeling.
So, I mean, the biggest problem is that, you're making the money, but if you're timing it wrong, it costs way too much to stay short.
Yeah, there's no point.
There's so much money. And the reason for that is this ARB. They're in there. And again,
they're already.
You could just be long the APE. You could just, the way that, it's just to be long the APE.
Cheaper.
Pay anything, but it's not going up. It's up 18%, which is a good move. But the AMC is coming down to it is the problem. So, I mean, that's the problem with, having these spreads on long term. You've got to be, if you're doing a pairs trading, you're shorting stock, you've got to be, you've got to know what those fees are, those borrow fees. They change every day too. So don't just think, I look today and it's 7%. It could be 100% tomorrow. As the things get tougher to borrow, they really jack the fees on you. So you've really got to be careful. But right now, today at IB, 351.25% to borrow AMC. They got it, but it's 351%. That's a year. But I mean, still, how much is that a day? I mean, okay, it falls 24%, so it'd be fine for today, but you're talking 1% a day. 1% a day. So, it's tough. You hold it for a week, 7 days, you got to make 7% on that to break even. It's tough.
Gonna need to sell a lot of popcorn to get this bad boy back going, but let's keep it moving.
Are the short's enemy.
Yeah,
that's why I usually stay within the S&P 500.
Yeah, this is
typical
tough
borrow fees. There's borrow fees on everything. They're typically 0.25%.
We're leaking. We're leaking a little bit here, Dennis.
Leaking a little.
Hey, that's good question here from Julius John. Recalled some time ago when you began trading, you lost 18 times in a row. I thought it was 19. What inspired you not to give up?
Well, I was early, right? So
you're trading small.
Yeah, I was trading very small. When we started at Bright Trading, take us back to, when I first met Joel Elconin, my first day at Bright Trading, he was in the South. He was the manager of the Southfield office in Detroit. And I joined in May of 1999. And I had a fairly successful retail career from 97 to 99 and had made some money. Simple reason was I wasn't a good trader. Just everything was going up. It was easy. It was like 2020 over again. Everybody's a genius in a bull market, right? So, but then I got in there and then I realized, oh my gosh, I don't know anything. Everything I knew was just bad chasing. Unlearn everything you have to learn. So there's 6 months to a year, of a learning curve is what Bright Trading was telling us then. So, and I had the first week by just crap luck. I made money in my first week of trading, but then my second week of trading got killed. I was losing on everything. And I think I joked that it was the record in the office. I think I lost on 17 consecutive trades. And you're going long short. So, I mean, that's just like bad trading, like you think about, it should be 50-50. You buy the stock or you short the stock, it goes your way or it doesn't go your way. So it's really impressive to lose that many in a row. So yeah, I mean, everybody struggles when they first start trading, unless you start in 2020 and then it's going your way. So I have the same thing, 1997. I didn't struggle either. I thought I was a god. I thought I was awesome at this. It took a long time. So I had the good first 6 months where I had lost, but I was trading small, 100 shares. I'd have a bad day. I'd lose $200. I'd have a bad day. And my account was slowly leaking for the first 3 or 4 months, but then it stabilized after 3 months and I wasn't losing anymore. And then I got back to 6 months. And I remember I was back to the break-even point. So I had gotten back to the 6 months. And I remember I was dating this one girl at the time, and I remember talking to her mother, and she had said to me, well, how much money have you made at this trading? And I was like, I haven't made anything yet. And she's like, you've been working for 6 months and you haven't made anything? She's like, you need to find a new career. Basically saying, you're not going to, date my daughter, this loser, dating my daughter, and I can't make any money in 6 months. But it's a business. When businesses first start, they don't make money. Traders don't make money right off the bat. Typically, this doesn't happen unless it's 2020 and it's all going like that. Everything's just going up, bull market. So you've got to treat it as a business. Education, learning, college education. After that 6 months, my account continued to go up, and I've never looked back since.
Well, I
It
got
made
to
my
the
life off trading.
I remember it got to the point where, because I had, followed all the traders in the office and everything, and Dennis was getting on the streak, and he was still like trading 100 shares. I'm like, Dennis, I think you need to go to 200 shares.
I was struggled. I had consistency, and I couldn't get off the 100 shares. So I was like making $100 a day, making $200 a day, and I still couldn't get I couldn't size up. I was just nervous. I still struggle with sizing up because I'm so risk adverse. I still struggle with that where I'm like, I should have hit that harder. I was really confident I should have hit that harder. I hit things pretty hard, but I still struggle with sizing up.
Because what, you're not, that's the thing, and we saw that in the office with people that sized up too much. I mean, I could name a couple guys in the office that lost their carcass shorting AOL, the whole way up. And
or buying stocks and the tech bubble burst going all the way down. Nortel Networks, the Canadian Nortel Networks, which was once upon a time 27% of the Toronto index, and people were buying. It was 120, buying at 100, buying at 80, buying at 60, buying at 50. It went off the board worthless, and it was the biggest company in Canada at one time.
Nortel Networks,
Nortel Networks, NT.
That took down one of our traders too.
I mean, this is horror stories. This is where when you're averaging down. And you pick the wrong stock to average down, and you can get yourself into a whole world of trouble.
He did average down. He said when the stock was at 80 and then one day it opened at 70, I said, hey, just, clean the slate, and move on and start your day. And he's like, well, how much can I lose? And I'm like, well, the stock could go to zero. And every day, man, I just watch that thing
slowly
whittle away that 100 share. How much can I lose? Well, you can. That was it. But let's talk about buying a stock that pays a $6 dividend every quarter.
Zim.
Yeah, Zebra IM. So I have looked at this, and I've done dividend capture on this, where you buy the day before, and then you bring it through, and then you get the dividend. But I'll tell you, this one is, it's a very interesting because it's plays $6 every quarter. It's now $18. Kramer has said, and I believe Kramer a lot of things. We make fun of him sometimes, but again, he's got good research team. They do their homework. He doesn't think the dividend is safe. I don't think the dividend's safe either when I see a 93% yield on something. But you know what? Continues to pay these $6 dividends. The biggest problem is it seems to go down more than the dividend. So if you bought this, let's just do a fun, little exercise here. If you bought this a year ago, so let's go back to 1 year ago. Today is April the 4th. So we go back to April the 4th of 2022. I'm just going back there. The stock was about $50. So I mean, 6, 12, 18, 24. So I get $24 in dividends, but the stock's down more than that. At a certain point in time, if it can continue to pay the $6 dividend, it's not going to continue to go down $24 because the zero. Stocks do indeed stop at zero. I don't know. Does anybody follow this story? ZIM integrated shipping, follow it closely. Is the dividend sustainable? Or is this just a matter of it's going to dividend itself to death? Eventually, it's just
it was 67.18.
It's over.
Did you say 67.18? That's what I have for the
that's where it was for 67. I ballparked it. I didn't have the actual thing. I got a bar there. So the low bar was 56. The high bar was 71 that week.
Yeah.
So I'm just looking. So 67. So you got the actual date. So you're significantly down. It wouldn't have worked in the last year. If you were going there for the yield, saying I'm getting a $6 dividend, you'd be down more than the dividends right now. It's stabilized here now. It's come up. I mean, if you bought this thing 6 months, or it's just a few months ago in December, it's 17 or 18. It's back to 18, but you just got paid a $6 dividend. So it's an interesting story. Dividend capture, the way that works, and it's a strategy that I do employ at times, is you buy the stock day before the ex-dividend date, take it through, get the dividend, and try to sell it the next day for less than the dividend, or lose less on the stock than you get on the dividend. It is working for people today because the stock's up $1.13. It just closed $17.07. So the $6.40 dividend.
But you know how I think people are making this successful, Dennis? And we've seen this, going with back AT&T and Verizon. They're not buying the day before. I mean, look what this stock has done since mid-March. If it's paying a $6 dip, I mean, and you're heavily focused on this,
Start buying up
maybe you
early.
got some at 20, 21, 22, 22 and a half, 23. That's why it's still alive, is because people are planning this out, it's not the day before. The day before, it's working out for you today. But what if you had an average position of like 22 and a quarter? Boom, you're just slamming bids today. You don't care. But if you took it home overnight, it's a little bit different. But I think that's the way people are. I mean, that's the only way people can be, or even like back here. I mean, look at this thing at the beginning of the year. It gave you forever and a day to, buy this thing under $18. I mean, if of course they cut the dividend and
well, that's what you think is coming. That's
Yep.
what you naturally think when you see a yield like this is like they're going to readjust the dividend. It's going to be 5 cents. And then you're like, oh, this sucks. I mean, this is usually how
wipes
these things
everything
work.
out.
But I don't follow the company, so I can't comment to that. I just know, Kramer said he believes it's not safe. I believe other people think it's not safe because it wouldn't have a 93% yield if they did think it is safe. But wow, I mean, you can't argue. If this thing stays at this price and you keep getting $6 dividends,
can they reverse split the stock to keep doing this game?
Why would that make a difference?
I'm just saying, like, as it keeps going lower and lower, getting like down there towards like, I don't know, $8.
The dividend. If it continues to pay $6 dividends, it's not going to continue to go down. So I mean, at a certain point, if it's the $6 dividends are going to continue to come, it's going to stabilize. The market isn't that stupid. So
hey, Dennis, we got some good information coming in here from AJ Jamil.
Yeah.
Zim, Israel charges a hefty tax from the dividend for non-Israeli citizens. So, it's a very
You gotta watch that too. Wow, that's
great
a good
point.
thing to know because there's taxes, and again, you got to watch even like the transaction tax over in France. Certain stocks I don't trade. Like if you go and trade like
what's that stock that you don't trade?
Sanofi, SNY.
SNY.
If you trade SNY, market makers exempt, of course, so it doesn't apply to market makers. But if you're not a market maker, you actually, when you buy and sell this thing on the sale, you actually pay a transaction tax. And it's like 10 cents, 10 or 12 cents. I think Total was one of them too.
Cheap.
Total's gone now, but that was another one too. But you got to watch certain countries when you're trading things over there. And then if they tax the dividend on you really heavy, well, then you're not getting that $6. So it's not as good. Again, market makers will be exempt, in a lot of cases to this stuff, but you've got to be careful on that stuff. So that's good information too.
All right, let's get towards one more story, and then we'll start wrapping it up here. Piper Sandler upgrading on Etsy from neutral to overweight and raised the price target from 135 to 140. Interesting chart, and I'm looking for charts like this right now that have still been a little sleepy and are starting to get going. So if you guys see any, let me know. This is going to be on my radar today.
Yeah, I mean, this is sleepy. This is a stock that's probably going to get kickstarted here today. It's up $4. So again, I think we need to find these stocks before they get upgraded. This could kickstart it though. So we're in a techie market. We're in a growthy market. All of a sudden gets a vote of confidence there. I wouldn't short this thing today at 112, just thinking it's going to give it back here because I've seen these things get ignited just from a rating change. So I think there's room to 120 here. I'm not necessarily chasing it, but maybe you get maybe you get like the 10 o'clock pullback or 9:45 goes up like 113 and pulls back to like 111, 110. I'd be interested there, just from a trading perspective. I think there's room to 120 on this.
I'm going to go shorter, a little bit shorter time frame here. You're trading up in the pre-market. I think your first area you got to take a look at is 115.5. I think you got a pair of highs surrounding that area. The better area, if you look, I don't see anything at 120, Dennis. I know you like to use a whole number there, but there is a triple top at 122.45 area. So those are really, and if you look at it on the chart, there's really not much in there. So that's what I'm looking at for Etsy, ETSY.
All right.
What else? There was one more rating I highlighted. Now, service now.
Yeah, service now.
It's up $10. This thing moves on ratings too. There's certain stocks that are very receptive to getting a buy rating because, again, you see on Apple and stuff, you see coverage on the major stocks more often. Get to these mid cap tech companies there, they get a rating And, if it's from anybody major, sometimes it can really move the stock. ServiceNow is lifting big time here this morning. Who's upgrading it?
All right, ServiceNow is a upgrade here from Bard, upgrading ServiceNow to outperform Baird, raising price target to 548.
Woo!
That's where it's a really interesting one, right? I mean, 548. We're pretty far from that.
You got a daily high, just strong bid at the highs of the session, 484.70. That's not too far away if you're looking for potential targets. And then the other one is 494.62, highest close you've had of the year. 491.27. Where to buy this thing on a pullback? Oh, I don't know. Like Dennis said, if you get anywhere near the double top of the last two ranges, 465.41 and 65.89, maybe throw a 66 bid out there if you get one panic seller coming in. But yeah, that's a look at ServiceNow. I'm going to wrap it up here. S&P's up 10 handles, 4163.75. Not much at the pre-market high. Kind of quiet session. I know we have a JOLTS job number, I believe, at 10 a.m. So that could shake things up. If you were unable to listen to our incredible special yesterday, you can go to premarketprep.com. It's still available there, and we're going to have some articles coming out later on, wrapping things up. But got some great input from a lot of industry experts. So, Triple D, I'll check in with you later on. Everyone, have a good day.
Couple of other stocks coming from the chat, little growthy names that haven't gone yet. Big Earl saying Datadog. Yeah, this sets up actually not bad too. DDOG.
It's in the industry
I wanted to talk about. Bull mode here.
So,
I mean, you had a nice move, a little inside day yesterday. Holds the $70 support, and if you get up above that 73.30, then you start thinking 75 and then 80. So, I mean, I don't mind that setup there either. See, there's always an opportunity somewhere. You can panic and chase the S&P. Or you can look for different opportunities here too. And Datadog beat me up.
That's why I go looking for industries, right, that haven't really taken off. So one of the industries, of course, that this is in is software application. So software application names, I'm looking for names like that, right? So that's DDOG. There's other ones. Intuit has just started going. That looks interesting.
But Intuit's always been strong. So, I mean, it's right up there. Actually, it has pulled back. I didn't really think Intuit was down that much.
I mean, it's pretty down from 700. It got like half. Yeah. It got cut in half, and it's starting to work its way back. I like the way the chart's looking to the left-hand side. No, it's a more expensive stock, but I can also mention smaller names here. Software application. Shop looks interesting. Man, we missed that opportunity of 40 again, Dennis.
We did, didn't we, Mitch? We talked about the 40. That's where it broke out from. Came back, retest the 40. Even did the little Gil Morales undercut and rally trick there.
This was the day that we really should have grabbed it. The 13th day, that when it was the bank worries, and it was right back at 40 there. Yeah. So interesting stock there. Would definitely keep watch on Shop. Let's keep going into some names there. Workday is one that's gotten started as of late. Look at this software application name. That's a pretty strong name.
It's been moving.
Talked about that when Christian Fromhertz. Mobileye could maybe get moving here. Software application name that hasn't really turned around and has been strong since it's come out. Has a couple of highs right above
45 that gets breakouty. Yeah.
Yeah.
You know what? Breakouts can work. If we go into a full bull market, breakouts can start working again. Breakouts have not been working for a while because we haven't been in this raging. I guess in the text we have in the last 3 months. But if you think we're going to continue this bull run here, these are the kind of stocks that could actually go in the next move. So
look at CRM's move since January. CRM's up almost 50%.
CRM's been a monster
move.
Monster turnaround. And we talked about CRM too. It was getting to a valuation where it was just getting cheap. I think it got down to like 19 or 20 times. Yeah. It was the cheapest CRM has probably ever been. It was the same thing with Meta. There was certain stocks that just normally trade with higher P's, and they came down to like normal P's. Even when Tesla got down to $100, we talked about 27 times earnings. It got down to, which is the cheapest Tesla's ever been because it traded with no earnings for a while there. So there was no P. It was just that little funny sign there that you get. So. Yeah.
And then healthcare had a recent move yesterday that I started catching an eye on. Of course, healthcare plans, we talked about that yesterday, why that got moving. But I'm starting to see these drug manufacturers starting to get moving. I saw Johnson & Johnson start getting moving yesterday. and really starting to show a little bit of a turnaround here. What do you think about these drug manufacturers?
I have a position, trading position, Johnson & Johnson.
Oh,
I'll limit my comments
there. You
there.
go.
Pfizer, I have a long-term position, so I can talk that. That's starting to show some life here.
Very
too.
similar charts.
Yeah, they all move together. Again, I pair trade these things, so there's different. When one gets out the other, sometimes they pull back in. Sometimes sometimes the pairs can be trending. It's different ways to play these things. Merck is Keytruda news every single night. Merck had a big move yesterday showing life. Lilly, I still think too, and we pulled back and maybe we missed the Lilly because now it's gone. They've obviously got that big weight loss drug that's coming. So, I mean, that pullback to 310, 315 was a huge buying opportunity. It's now 352. So now it feels like it's gone. Even Moderna has started to show some life here. Exactly. Remember, I talked about the Moderna BNTX spread. That would actually be doing pretty well here right now. I believe BNTX was 140. Still 130, so it's come back off. But Moderna, I think it's actually right around where. So it's probably right around 160 was when I was talking about it. Then it pulled back, so it's back to where it was.
What do you think about this Amgen?
There's stuff showing life everywhere, which is a case for the bulls. I mean, you're starting to see broaden out a little bit. We had the problem where this was 6-7 stocks that really drove the first 3 months. Well, now we're starting to see it broaden out a little bit there. And that's what you need to see to continue this bull market. You're going to need other stocks participating. If you start to see that
rotation to them,
that gives the bulls life.
I think that's a very important outlook that Dennis just gave you guys. And this one thing that I'm looking at, and I'm watching what sector-wise, right? What's getting the lift now? Defensive as of late starting to get a lift, right? Rotation to some of the value names, right? Or maybe growth at reasonable value with the healthcare names, right? So GARP type of looks. Right. And one thing that's going to be something that I'm going to be looking at, Dennis, and I think you and I are very open to seeing that, is maybe some of these tech names going into a little bit more of a profit taking and seeing where the rotation goes. Do we just continue riding higher with some other rotation into, let's say, value or healthcare? I think this is something that we're keeping a close eye. And like always, we've talked about it. This has been a monster run in tech. It can keep running, or it can turn around. That's the truth. And I know that it might sound as simple as to say that it can go both ways. Right now, we know it's extended, but it's riding that wall of worry. And it can continue riding that wall of worry until the bad news comes, right? Will it be a CPI? Will it be a banking issue? Will it be an inflation issue? For right now, seems like things are a little bit rosy from what we're seeing right now. And of course, that can always change with one data point.
It can change with anything. I mean, there's potential tape bombs here. We're coming into earnings season. You know what, though? I'm not that scared of this earnings season from a bull perspective. Though, because expectations are lower here. So this could actually be an earnings season that could drive price. So I think the bulls are in control here right now. There's no doubt. And I've been on the bearish side. So, and I've been wrong here for a bit. But again, what I've said before is, it's okay to be wrong. It's not okay to stay wrong. So at a certain point in time, if we continue to go higher, I'm going to have to reallocate some of this capital in. Yeah. You don't want to be buying at the highs, but you find opportunities. I mean, just like we were saying with Datadog here, here's a stock that hasn't gone. So you could buy this and not saying, if we go into a recession bear market, this thing's going to go down. So if my original thesis can be right, I will lose in that position. But if I'm really having FOMO, you don't have to chase. There's always something else you can go into. And I've talked about Johnson & Johnson. I've talked about Pfizer. I'm in Pfizer already. There is some stocks, good companies that have come down significantly here. And some of them have not rallied yet. So why chase a stock that's just went up, 20%, in 2 weeks, when you can go and, you look into something that maybe there's a catch-up trade potential and something that hasn't gone yet. Always an opportunity somewhere.
I agree with that. And I think that if anything, if we keep breaking out, we'll look for maybe some 50% retracements, right, of recent moves. We'll find out what happens there. And in the chat, they asked about travel and leisure. I'll make one little comment. Maybe Dennis has a little comment. I don't like that oil's going higher for at least, let's say, like airlines and cruise lines. I don't like that oil's going higher. If we are going to get crude back above 100, well, they're not going to be too happy about that, right? So what would you say, Dennis?
I don't think it's good for
leisure
stocks
and travel
going higher. I don't think it's good for stocks over. I don't think you can have your cake and eat it too here. I think if oil continues to go up, I think stocks eventually start to go down here because that's going to kill the inflation, the Fed narrative of pivoting. People will eventually put it together. People are slow at putting it all together. They're very slow at putting the pieces of the puzzle together. The reason I'm successful is I try to put the pieces of the puzzle together faster. Sometimes I'm trying to build it so fast. Sometimes I build it wrong. but I'm trying to always put it together and try to stay ahead. They aren't even talking about, like the oil, but if you put it together, if oil continues to elevate, like, oh, this is good, stocks are going up.
Yep.
But the next piece of the puzzle is that's inflationary. And other commodities start to follow if oil starts going up. And then that's inflationary. And all of a sudden that pivot that everybody's banking on is pushed further back. So I don't think it's good news if oil continues to go higher. And I do believe oil can go higher. So I'm still staying in the camp where I want to have I still am cautious in this market. Been wrong to be cautious. I'll tell you right now, I've been wrong and it hurts. I wish I was fully invested, in the last 2 weeks. But you know what? I'm glad I wasn't fully invested a year and a half ago. So, I mean, you're never going to get it perfect. You just got to get it, kind of right.
Yeah. And I mean, I think the overall thing here is that you're being protective here, and it's okay to be protective. I think as long as you're able to find return elsewhere, and you've clearly stated it, right? You're finding return elsewhere.
Well, I get 5.2% for being completely safe. IB. Listen
There's nothing wrong
one.
with that. There's nothing wrong with
that. 4.33% on my idle cash right now.
Just
I'm
sitting
like,
there.
I just want to move more cash there. That's no place given 4.33 on freaking idle cash. There's certain, like, obviously, it depends on where you're going. Different brokerages offer different things.
Your Bank of America account, savings account isn't giving you that.
It ain't
I'll tell
giving
you that.
But there's also, but if you tie up, short term, you do get some yield. It's like, and this is the biggest problem for the banks as well. This is the biggest problem for the banks as well, is that the people who are just sitting money, well, I'll just sit the money in my bank account because it doesn't make me anything, aren't doing that anymore. They're moving the money around because there's yield out there. I used to sit like, I'd have, a significant amount of money sitting in my checking account because I just didn't want to bother looking at it every week to make sure, if I'm writing a check, it's going to clear. Now I'm like, watch it, because I'm keeping that checking account at a minimum because I don't get anything in the checking account. And then I'm moving that money to different places, even short-term tie-ups, where I'm picking up 3-4% just to even have short-term cash. And then if you're willing to go out a little bit further, you can get more as well. So it's just something to consider. I mean, there's lots of different places to put your money, but it's, the main thing is it's just we're in this market where there is an alternative. The TINA trade is dead. There is an alternative. And you know what? If the market goes up 10%, but you're making 5, it wasn't that bad. And you're making 5 risk-free. And people say, well, you can't make me money. Well, a certain portion of your money should always be in cash. You should always have some, bullets in the chamber. Isn't it nice to make something on that cash? I was getting 0 on my cash all the way along. You always want some cash to be able to deploy it, if there's opportunities. I always want to keep some, spare ammo there if you've got a good opportunity. So, am I taking my whole portfolio and tying up at 5.2%? No, I'd be losing to inflation. But that cash portion, sure, is nice to get some return on that. But there is people out there that'll be like, why am I going to go into the market and try to pick up 7 or 8 when I get 5 risk-free? That's a problem for the market.
Like always, you guys can keep up with everything Dennis Dick does. Keep up with his Twitter. Give him a follow. Triple D Trader will keep pumping along. And like always, take a look at the interviews that were done yesterday. If you guys didn't catch it, of course, PreMarket Preps channel. It was 6 experts, I think, yesterday. Man, you guys killed it. I was watching. I didn't get to watch every single interview, so I myself got to go ahead and catch it a little bit. But I did catch like Blue Putnam. I was able to catch Craig Johnson. So if you guys didn't catch that, definitely check out that interview with Dennis and Joel. We'll have you back on. Like always, Dennis, have a good day, my friend.
Okay.
Take care.
See you.
All right, that's going to do it for us today. Like always, we do got a partnership with TradeZero. You guys check them out if you guys are looking for some short locates. We're going to wrap it up here, bring you guys over to live trading. That's coming up next. And we're going to keep pushing forward on, of course, our book club. If you guys haven't joined the book club already, we're going to keep pushing forward. This week, we don't have a show. I do want to kind of mention that. I'm going to be getting out an email today. I was going to have a meeting this weekend, but of course, it's Easter. Well, I'll take the weekend off. But like always, you guys can join the book club. Hit that link in the chat there so that you guys can start learning and start pushing yourself to the next level. I talk about chart patterns all the time, especially on our live trading stream. But check it out, guys. Japanese candlestick charting techniques. One of the best books that you guys can be reading to up your trading skills. So if you want to do that and do it in an environment, a supporting community environment, join the book club. I really love how the book club approaches things. If you guys will see, the members there are really truly trying to up their skill. So if you're one of those people out there that, you know, don't care about the hype or just looking to up your skills, check out the book club. You'll definitely enjoy it. Let's give you guys now over to, of course, live trading that's starting up right now.